If you have been looking for a video on the mastery of technical analysis, then this is the teaching for you. Because in today's video, I'm going to be showing you guys, explaining in the easiest terms how to be able to analyze using what? The proper technical analysis methodology. Okay, so this video can be for beginners and it can also be for professionals struggling with how to properly analyze the Forex market. So grab your pen, grab your book, and take note of every single thing I'm going to be talking about in today's teaching. Let's go, guys. We are going to start by talking about what technical analysis is. Technical analysis entails the art of using chart data to predict the future movement of prices. This means for you to be a profitable technical trader, you should be able to learn how to read technical analysis properly, and you can now be able to use that to your advantage in predicting the future movements of prices. Okay, we all know that when it comes to trading, there are different ways to approach the market. There is technical analysis, there's the fundamental analysis, and there's the sentimental analysis. Technical analysis is unique because it is the only analysis system that entails using chart data strictly to predict the future movements of prices. Okay, so what next are we going to be talking about? We are going to be talking about the methodology in which we use technical analysis with. And what is this methodology? It is called price action trading. Let's go ahead and write it down. Price action trading is the methodology or the strategy that we now use as as the vehicle to drive our technical analysis with. Okay, so what is price action trading? Price action trading entails the art of reading historical and recent chart data to predict the future movement of prices. Okay, so when it comes to technical analysis, there are different ways a lot of people use technical analysis to analyze the market. You will see some people stick to the 15 minutes time frame, read candlesticks and all of those things to predict the future movement of prices. You will see some people stick with only the big time frames and all of those things. Okay, but with us as price action traders, we strictly use a coordination of all the time frames on the Forex market. That is we go on to the monthly time frame, which is the highest time frame available to us in the market, and we coordinate with the information with the weekly, daily, 4 hours, and the 1 hour time frame in order for us to pick a real-time trade entry opportunity. Okay, and with price action trading, unlike other forms of technical analysis, here we strictly use chart data. There are some people that analyze using technical analysis and collaborate it with other informations, maybe indicators or AIs or other type of third-party information. But with price action trading, we strictly use chart data. It is the purest form of technical analysis that entails us using price action and technical analysis, the pure chart data to predict the future movements of prices. Okay, so price action is very beautiful, and it is a medium, it is a vehicle that we use in applying our technical analysis. Okay, so with price action trading, we also have a very important thing to talk about, which is the skeletal framework of price action trading, and it is also the skeletal framework of technical analysis, which is chart structure. Okay, so let's go ahead and talk about chart structure. What is this chart structure? Okay, so chart structure is important because chart structure are the coordinated movements of prices or of candlesticks on the chart. When a novice goes onto the chart and the novice sees all of these candlesticks, the novice says, oh, these candlesticks are making random movements. Okay, but for us as technical professionals, we know that these candlesticks are forming into likewise patterns, and these likewise patterns are called chart structures. Okay, and chart structures are the skeletal framework of technical analysis. For you to be a professional technical analysis, you don't read candlesticks in itself. Okay, imagine going onto the chart and seeing individual candlesticks and trying to read those individual candlesticks. Fine, you could get information from them, but reading them together, right, putting them together and reading them together would give you the most accurate information, and that is where chart structures come in, because chart structures are what are the coordinated movement of all of these candlesticks, and we read the coordinated movement of all of these candlesticks in order for us to be able to get what high information in terms of accuracy. Okay, so now that that has been talked about, what next are we going to be talking about? We are going to be talking about the two types of these chart structures. Okay, so now let's put chart structure to the middle right here, and we are now going to be talking about the types of chart structure. Okay, so under the types of chart structure, we have the bullish chart structure and we have the bearish chart structure. Okay, so what is the bullish chart structure? The bullish chart structure entails coordinations of higher highs and higher lows. Okay, so when you go onto your chart and you see the market trending upwards, it is probably a bullish chart structure. But beyond that, bullish chart structure entails clear coordinations of what? Of higher highs and higher lows. Let's go ahead and also write that out. That a bullish chart structure entails clear coordinations of higher highs and higher lows, while what a bearish chart structure entails what clear coordinations of lower highs and lower lows. Let's also write that out. Lower highs and lower lows. Okay, so now we are now going to go over to a plain chart to talk about the differences between a bullish chart structure and a bearish chart structure. Okay, so let's go on to a plain chart to apply that in real time. Okay, so now this is it. This is an example of a bullish chart structure. Okay, so this is a bullish chart structure. Now, where did the coordinations of higher highs and higher lows come in? Okay, at the lowest point right here, we can call this a low right here. This point is a low. Okay, we can just put the L there just to indicate that this point right here is a low. Okay, so now this point right here can now be referred to as what? As an higher low. This is why we said that what chart structures entails clear coordinations of higher highs and higher lows. So this is a low because it is the lowest point of this particular structural movement. Then the one ahead of it is an higher low because it is higher than the previous low. While the next one ahead of it is also an higher low because it is higher than the low that is just right behind it. Okay, so how about for the high side? Right here, this is an high because it is the what? It is the beginning of this structural movement. How about here? This is an higher high because it is higher than the previous high. And what about here? This is also an higher high because it is higher than the previous high. So all of these together are known as what? As the bullish chart structure. Okay, so these are very important that when we go onto our charts, we try to see if what prices is either on a bullish chart structure or price is either on a bearish chart structure. That is going to allow us to be able to be more accurate in terms of predicting the entire trend and the entire direction of prices. Okay, so beyond this, what are the bearish chart structures? Okay, so the bearish chart structures entails what? Clear coordinations of lower highs and lower lows. Okay, so where does this come in? For example, this level right here can be called what? An high. Okay, so we'll call this level an high. How about here? This is a lower high. Why is this a lower high? This is a lower high because it's lower than the previous high. It's an high that is lower than the previous. How about this? This is also what? Another lower high because it is lower than the previous high. Okay, so how about here? This one can be referred to as a low. Okay, because this is what? This is the first low in this whole structural movement. How about here? This can be seen as what? As a lower low. Why is it a lower low? Because it's lower than the previous low. And how about here? This can also be seen as a lower low because it is lower than the previous low. So all of these are referred to as what? As a bearish chart structure. Okay, so like I said, it's important that what when we go over to the charts, we should be able to define if prices is what on a bullish chart structure or on a bearish chart structure. Okay, but beyond this, it's also important to note that sometimes prices can actually change from a bullish chart structure to a bearish chart structure, or change from a bearish chart structure to a bullish chart structure. Okay, so how does this happen? And I'm going to give you the rules around this. Okay, so first of all, these are clear bearish structures. As we can see, this is the last lower high. Let me just take that off. as we can see. So now, for a bearish structure to change to what? To a bullish structure, there must be what? A break of the last lower high. Remember that this level right here is a what? Is a lower high. There must be a break. Prices must close above and create an higher high for what? For this to be defined as, yes, the bearish structures are done, and right now the bullish structures are currently in charge. So this is what we mean by a break of structure. Okay, and this is the only way that a bearish structure can be broken and converted to a bullish structure. The last lower high has to be broken and price has to close above to create an higher high. Okay, so this is the rule one of what? Of a break of structure. How about the other part? How does a bullish structure break into a bearish structure? Okay, so we must see that this is the bullish structure. We must see that the last higher low gets broken. This is an higher low right here. Why is this an higher low? This is because it is higher than this low right here, which is also an higher low. So the last higher low must be broken and prices must create a lower low right here for a bullish structure to be broken. Okay, and this is the only way a bullish structure can be broken. Just like I showed you guys how the bearish structure broke, that is the only way a bearish structure can be broken. And these are very important and concrete rules when it comes to what? The break of structure. Okay, so what is the next thing that we are going to be talking about? We are going to be talking about the rules for trading these structures. Okay, what are the rules for the formation of structures? Okay, so let's just go ahead and write it down. That these are the rules for the formation of structures. These are very important points that helps us in order for us to be able to define if prices is on, if it's on a bullish structure, or if it's on a bearish structure, or if a break of structure has happened in its entirety. Okay, so one, it is important to note that that for a formation of a bullish structure, for example, this is a bullish structure, right? If prices comes to this level, an higher low is not established until prices create an higher high. So if prices is here around this point, this is not yet an higher low until what? Until prices creates an higher high. It is after prices creates this higher low level here, by creating this higher high, that will now say, yes, okay, we've seen an higher high. This now becomes an higher low, because I've seen a lot of people, see structures around here and they're like, oh, this is an higher low, only for prices to just, go ahead and break below. Okay, so higher lows are only confirmed by the presence of an higher high. Okay, so this is very, very important, and this is a very important rule when it comes to the formation of structures. Okay, so how about for the bearish side? Okay, this is it. Lower highs are only formed when there is a lower low. If there is no lower low, then this is not a lower high. Okay, so lower lows are only formed by what? By the presence of a lower high. A lower high is what confirms, a lower low is what confirms to us that yes, the lower high is legit, and we can be able to solidify this as a lower high. But without the lower low, then the lower high is not legit. So this is very important when it comes to the rules for the formation of structures. Okay, so beyond all of this, we've talked about very beautiful things that we use in applying into our day-to-day when it comes to reading structures. Okay, so one of the very important things that we are now going to talk about again is what is fractals. What are fractals? Okay, so now let's go ahead and talk about these fractals. Some of you must have heard about fractals and don't know your way around it, and some of you, this might be your first time hearing about fractals. Okay, so what are these fractals? It's important to note that fractals are what? Fractals are likewise movement of chart structures. Okay, so with our more professional understanding of structures, we now found out that, okay, all of these structural movements are not exactly the same. These structural movements move in what will now be known as fractals, right? And they are not exactly the same. Okay, so what are these fractals? We now discovered that what fractals are likewise movement of structures. Let's go ahead and write it out. Fractals are likewise movements of structures. And it's also important to note that fractals can be measured in pips, by measuring, let's write it out, by measuring the length of the exhaustion. Okay, so this is very important. The length of the exhaustion can be used in measuring fractals correctly. Okay, so what do we mean by that? For example, and as I'm explaining that, I'm also going to be explaining what the rules of trading fractals. Rules of trading fractals. Okay, so what are these fractals and what are the rules of trading it? Okay, so we are going to go over to the descriptive analogy of it. Okay, so first of all, the first rule of trading fractals is that what a break of a small fractal does not affect the big fractal. Okay, and what is the second rule of it? The second rule of it states that what a break of a big fractal affects all the small fractals behind it. Okay, so how do we apply these rules and how do we apply the definition of fractals? Saying that fractals are likewise movements of structures. Okay, so this is the plain chart. For example, if we see prices make movements like this, push exhaustion, these are big fractals, right? Push exhaustion, these are big fractals. Then we now see prices start on small fractals here of push exhaustion, push exhaustion, push exhaustion. Like we said, fractals can be measured by what? By the length of the exhaustion. Like you can see, all of these exhaustions here, these three exhaustions here, are smaller in comparison to all of these big exhaustions here. Okay, so now if there is a break of this exhaustion now, which is a small exhaustion and it's a small fractal, the maximum level you can sell to is the 100.0 here. This is the maximum level you can sell to, all within what? This small fractal. Okay, the same way it happens for bullish is the same way it happens for bearish. Let's see it, in regards to that. These are big fractals. Then we now see prices now start on small fractals, right? If we see a break of structure right here, the maximum you can buy to is to this level. This is the maximum take profit that you can buy to, because what? A break of a small fractal, as we can see, does not affect the big fractal. Okay, so that is the first rule of it. And we said these fractals are what? Are likewise movements of structures. Like you can see these big fractals here. These ones are alike. Then you can see the small ones here. These ones are also alike and unique to themselves. So a break of this small fractal does not affect the big fractal. Instead, the opportunity ends within this particular small fractal here. Okay, so what about the other rule? The other rule states that a break of a big fractal affects all the small fractals behind it. For example, these are small fractals, and we now see price establish a big fractal here, and price now eventually breaks the big fractal here. Okay, when this break of structure has been defined, where's the maximum you can sell to? The maximum you can sell to is to the ground level, because the break of this big fractal here has affected the small fractals behind it. Okay, so that is very important when it comes to the rules of fractals. The same way it happens for the bullish structure is the same way it happens for the bearish structure. We see prices start on small fractals here, then eventually establishes a big fractal and eventually breaks the big fractal. If you are placing a buy entry here, okay, you can be able to exit at the highest level here. This is because a break of this big fractal has affected all of the small fractals behind it. We are going to be taking everything we learned on the whiteboard onto the real life chart in order to apply it in the most simple way possible. Okay, and now we are going to be using gold for our teaching today. As usual, we said that in analyzing using technical analysis, we read chart data in its entirety, and we said the vehicle we use is price action trading, and price action trading entails reading historical and recent chart data and collaborating those information in order for us to get a real-time trade entry opportunity. Okay, so this means that in analyzing, we must start from the monthly time frame, which is the current time frame that we are on. And what do we do on the monthly time frame? We identify the real-time points where price is at, which I have currently done right now. And after this is done, we now read the entire structures that took prices to that point. Okay, from where my screen can take, we can clearly see that this is a small fractal here. We just learned about fractal. Then price established a bigger fractal here. Then prices came and established the biggest fractal here. After this, then price now started moving on small fractals again. Okay, all of these are small fractals. Then price now established another big fractal here. Okay, then after this, it now established a smaller fractal here before now making a push to the top. Okay, so one thing is certain is that what on the monthly time frame, there are different wave of fractals as we've seen, and we've talked about the fact that what that we, due to our professionalism, we discovered that what all these structures are not actually the same. They are categorized into fractals, and on the monthly time frame, we've seen different wave of fractals that prices have moved in. So what is going to be my job? My job is going to be what? Categorizing prices into fractals until I see a real-time trade entry opportunity on the 1 hour time frame. Okay, so what is going to be next for me? The next thing for me is that what we have clearly seen that the monthly time frame is bullish, which allows us to know that what that prices on gold in its entirety is bullish, which means if I am buying it in the direction of trend, and if I am selling, that means I'm trading against the overall flow of the market, which will now be known as a retracement. Okay, so what am I going to do? The last higher low as identified here, I'm now going to take it with the highest point of the chart as identified, and this window is now going to be known as our range of focus. What does range of focuses do for us? It allows us to, all of this bulk of information, it allows us to just slim the informations down until what? Until we see the most important information for us at that particular point. Okay, so clearly on the monthly time frame, price is clearly bullish, and now we've now picked the last higher low and the highest point of the chart, and this window is now our most important window for us right now for a real-time trade entry opportunity, and that is why it is known as our range of focus. So the range of focus are going to keep slimming down until we see a real-time trade entry opportunity. Okay, so now within this window, which is known as our range of focus, we also keep breaking prices into fractals. From here, we saw prices making push, exhaustion, then making push, and exhaustion, then making push and exhaustion. Within the confines of the same fractal, this is also the last higher low. This means there is no exhaustion ahead of it that shares equal or more length in terms of pips. So what is going to happen? This low right here is now going to be the lowest point of our range of focus, and this window right here is now going to be our new range of focus. Okay, so from the top to the bottom here is going to be our new range of focus, and we'll look for an opportunity within this window. So you can see how beautifully we've come from the monthly time frame in the most simple way to the weekly time frame in the most simple way. Now we'll take it to the daily time frame. Okay, so what happened in this daily time frame? I'm going to be talking about a trade entry opportunity we took and made some money on, and I'm going to be using that as our teaching for the example today. Okay, so now within this window, which is our range of focus, right? From here, at the beginning here, we saw prices make push at this level. Then we saw prices came for an exhaustion here. So this was a big fractal. After this big fractal, we saw prices start, by making all of these very small fractals here, eventually establishing this particular fractal here, which is big but not as big as the previous one. Then after this, what the prices do, price now started making smaller fractals again. So these are different wave of fractals. Okay, and this smaller fractal here, this smaller fractal got broken at this point. This was where the smaller fractal got broken. The last higher low of this fractal got broken here. So in that case, what would we have done in order for us to get a real-time trade entry opportunity? We would have said that okay, here there are different wave of fractals. What is the first wave of fractal? This is the first wave of fractal here. After prices made this big push and exhaustion, first wave of fractal. What is the second wave of fractal here? After prices came down for this exhaustion. I'll make it pinpoint. After prices came down for this exhaustion, okay, you can see the push exhaustion, small fractal, push exhaustion. They now came back and made a big push and exhaustion. So this is a second wave of fractal. Then after this, price now started making the small fractals here, which is now the third wave. So it is of this third wave that a break of structure now happened. So now, where is going to be my exit? My exit is going to be because if we are selling it, it's a retracement, just like as we've seen. If we are selling, that means we are trading against the overall flow of the market. So because if we are selling, it's a retracement, so our exit is going to be at the 61.8 Fibonacci level. I have a full course on the Fibonacci that my students have learned, and they know how to apply Fibonacci massively for high trade entry and trade exit opportunities. Okay, if you want my full course on Fibonacci and other parts of technical and price action trading, link is in the description below for you to register to my academy and come on board into mastery. Okay, so now within this break of structure, right, where is the right Fibonacci to use? Okay, it's from the low here to the high here, and you can see that prices duly ended at what? Ended at the 61.8. We all know that what 61.8 is a retracement level, okay? And what? And the 61.8 ends a retracement. So now within this third wave of structure, a break of structure happened, and the break of structure ended at what? At the 61.8 level. You can see 61.8 clearly written there, and that ended what? This wave of this sell wave. Okay, so what am I going to do? The next thing I'm going to do is to write out the fact that this is what a 61.8. I'm also going to write PRA behind it. What does PRA means? It means potential reversal area. So I'm going to go ahead to the 4-hour time frame in order to just expatiate on what we just talked about. Okay, so within that particular wave, we saw prices make all of these movements, right? This was push, exhaustion, this was push, exhaustion within this particular wave of movement, and we saw what? A break of structure. Okay, and we also talked about how a break of structure happens. A break of structure happens when the last higher low gets broken. Okay, so right here we can see that this is the last higher low that got broken, and what the prices do? It ended the opportunity at the 61.8 PRA, which is all of these windows right here. Okay, so now within this, what I'm going to do, let's just bring out the Fibonacci again from the low, just to reiterate that from the low to the high here, all of this window right here that price is rejected are what the 61.8 has indicated. Okay, so how can I get a real-time trade entry opportunity since we've seen where the retracement is going to end? What am I going to do? I'm just going to what? To pick the high point right here and the low point right here that brought prices down to this 61.8 PRA, and at a break of structure, I'm going to buy in the direction of trend to the highest point of the broken fractal. So I will take that to the 1-hour time frame. So what is going on the 1-hour time frame? On the 1-hour time frame, I've already seen the last lower high. This is the last lower high of prices, and this is where the structure got broken. So it's a beautiful situation, right? Of push here. Then what the prices do after making the push, it came back for an exhaustion here. Then came back to rhyme with what? Rhyme with the same fractal here by making push and exhaustion here. Then after this, it made push to this level, then which is the 61.8 PRA, ending this sell movement. Then after prices ended this sell movement at this 61.8 PRA, what the prices do? Prices broke the entire bearish structure that brought it down. When price broke the entire bearish structure, where's my take profit? My take profit, as we all know, is going to be at the highest point of the broken fractal here. Then where it's going to be my stop loss, I'm going to hide my stop loss just below this level here. This is where my stop loss is going to be, just below. Let's indicate that this is where our SL is going to be, and this is where our TP is going to be. Okay, so this is a very beautiful trade that probably, hit take profit in under a day by just what? By just applying the most simple technical analysis methodology. Okay, and this trade will probably even give us close to a 1:2 risk to reward by what? By just reading the structure that brought prices down. Let's go ahead and reiterate on it. This is push, this is the exhaustion right here. Then what the prices do? It came down again, made push, made the exhaustion right here, came back to this 61.8 PRA here, then broke structure within the confines of the same fractals, which provided us with a pinpoint buy entry to the highest point right here. Okay, so this is our very beautiful analysis on gold, and this is how we are able to make massive income by what? By just learning and mastering the very simple art of technical analysis. Okay, so if you want to learn more, we have so many tricks around it. Link is in the description below for you to join my mentorship program, and I'll hold you by the hand into the understanding and the mastery of every single part of technical analysis, including our tricks and secrets that I'm going to let out to you. So see you guys in the next